our webinar today. Again, my name is Marissa Goodbody, and I'm the Client Relations Manager here at Trade Ideas. For today's webinar, we have a special guest from Tradespoon, Vlad Karpel. Vlad will be covering a new view on selling options premium into market strength. We'll explore the concept of buying into weakness when the market's moving down and selling into strength when the markets are moving up. So let's get started, and I'm going to go ahead and pass it over to Vlad.
Thank you, Marissa, for the introduction. Can you hear me?
I can hear you.
Perfect. And then let me share my screen. Just want to make sure you guys can see it. So can you see my screen?
Yes, I see your screen.
Marissa, can just type in if you can. Perfect. Yeah, if you guys can type in yes, if you can hear me and you can see my screen, and we'll start. Excellent. Thank you for the feedback. Again, I want to say thank you to Trade Ideas, to Dan, Brad, and Marissa for having me. This is my second appearance to Trade Idea community. Thank you very much for taking time. And I'm going to talk about selling options premium into market strength. I think this is a perfect time as the market is at all-time high. We're well into the middle of the earnings season, and today we had this whole week we had a short-term sell-off. So we want to make sure that we can identify these opportunities and make sure we can take advantage of them. So for those of you who are new, I'm Vlad Karpel. I was Executive Vice President and Head of Technology at Options Express from its inception. I also work at several startups and hedge funds here in Chicago. My passion is to work for startups and build technology for traders. For the past 15 years, I've been trading my own money and been trading friends and family money. I've also been a mentor and a teacher for Tradespoon community. And we've developed at Tradespoon several models that predict where the stock is going to be in the next few in the future. So before I jump into the presentation disclosures, I'm not a registered independent advisor. Options do involve risk and are not suitable for all investors. Before you make any trading decision, you should consult an independent financial advisor. The information of this presentation is provided solely for general education and information purposes only. The presenter of this video, Vlad Karpel, and team at Tradespoon may have financial interest in some of the securities that we will go over today. Before I get into the topic, one of the common obstacles that I face when I start trading, and then I'm sure a lot of you can share my experience, is that you can be correct in the direction of the market or a stock that you're trading. You can be correct on the timing, but the short-term volatility can create a situation where you get stopped out. So you have a position, you have a short-term volatility like we have today, your orders get triggered, your stop orders get triggered, and then you only find out in the next couple of days that the stock or an asset that you're trading, whether it's futures or options, are now trading in your direction. And that causes a situation of where you start chasing the market, and instead of managing, you speculate on how to trade. In our experience, to be a successful trader, you do have to not only have the right stock to trade and the right pick the right direction, whether up or down or stock trading in the range, but you also have a trading plan. And we're going to go over through the entire presentation today the importance of having a trading plan when you're managing your stock and option positions. So we've developed at Tradespoon a system for monitoring all of the stocks that trade on NASDAQ, New York Stock Exchange, and Amex. And we build the quant models that predict where the stock is going to be in the next 50 days. So I know the Trade Idea has an elaborate system in terms of its technology and how you can backtest different situations. So I want to go over our system and show you what are some of the similarities and main differences are. So what we do, we combine technical and fundamental analysis, and we run neural network models. Unlike screeners or technology that like Trade Ideas provide, where you can search for unusual option activity, you can search for RSI, you can search for different indicators and backtest them. We kind of do that on your behalf. What we're doing, we build neural networks that trains on price data and earnings data and predicts where the stock is going to be in the next 50 days. So I'm going to go over actually go over and make sure that we can see some of the examples on the screen. So this is the same screen that we show. So if you're a Tradespoon, once you have a Tradespoon account, if you go to Tradespoon's what we call Scoop or Bulls, it runs a screener that shows you what stocks to trade. And every day you can trade different. You need to trade different stocks. So in order to be a successful trader, the first step you need to identify which direction of the market. Is the market going up? Is the market going down? Or is it somewhere going to be in a certain range? You have to have that decision. You don't have to be exactly right on the key support and resistance levels, but you have to have an idea. If you're bullish and you structure your portfolio bullish and all of a sudden market sells off 20%, well, you're going to lose money. So you have to have that criteria. The second step to be a successful trader, you have to know which stocks to trade. And you can use different factors. You can look at moving averages, you can look at unusual option activity. But what we do at Tradespoon, we kind of do this work for you. We are predicting where the stocks, so out of all the stocks that trades on NASDAQ, New York Stock Exchange, or Amex, we're predicting where the stock is going to be in the next day, 10 days, 20 days, and 50 days. And based on that prediction, we are showing you which stock have highest predictability in terms of for the next 10 to 50 days, which stocks have the highest predictability and probability of success, and then which stocks you should trade today. So we kind of do that homework and tell you exactly what stock to trade. And then the final step to be a successful trader, once you know which stocks to trade, is creating the right strategy, whether it's a stock or option strategy, that can improve probability of success and put odds in your favor. So here I ran a screen for short-term trend and long-term trend 9 and 10. What do those numbers mean? The short-term trend basically says that FedEx, looking at our models, the 30-day, 40-day, and 50-day days prediction is to the upside. And it has high probability of, you see on your screen, of 87% being higher in the next 50 days. So as we said, in order to be a successful trader, you need to pick the right asset to trade, in terms of whether you look at the fundamentals or somebody tells you what to trade, or use a software like Trade Ideas or Tradespoon to pick that stock. And then once you have that stock, you want to see where the stock is heading, higher or low. And we're making this prediction for you. So our prediction for FedEx into the next 50 days, that it's going to trade higher. And there is an 87% probability of that. Then the second number is the rating. Rating basically shows out of the universe of 8,000 stocks that we are monitoring between NASDAQ, New York Stock Exchange, and Amex, compared to the other stocks, FedEx, is it rated 10? We're very bullish on the stock, or is it rated 1? Based on its fundamental and technical analysis. So that's the first step in our process. Every week we run these neural networks and we're making predictions on each stocks where it's going to be, and then the best stocks that we think has the highest predictability factor, we are telling our subscribers to trade. Once we do that, the next step, well, it's great that you have a signal to trade FedEx or trade Apple, but what are the key support and resistance levels are? And you can use traditional charting analysis. You can look at the MACD, you can look at the moving averages, but we believe that by building algorithm and neural networks and looking at the information, we can predict with high certainty where the stock is going to be in the next day, 2 days, and 10 days. So how do we do that? How do we find these key support and resistance levels are? Well, for FedEx, you can click on Analyze and click on Seasonal Chart. Open link in a new tab. And we're basically showing you different pieces of information. First is the current year. How did FedEx behave going into the earnings and for the past, in April, March, and February. The second piece of information is this orange line. This is our prediction. Going into May 7th, 6th, May 8th, where the stock main support and resistance levels will be, whether the stock is going to be at 161 and 171. We believe that FedEx in the next 10 days will be between 161 and 171. So you can see as FedEx approaches 171, this is a bearish event. In our view, if you're trading weekly options or you're trading stock, we don't think there is a high probability of FedEx breaking 171 level. So you can use that information to create a strategy, whether you want to short a stock or sell a stock that you have, or you can utilize option strategy and sell call spread or buy a put. So that's the second step in our process. This is the predicted price. This is the current price. So we're kind of looking into the future, what FedEx will look like going into May and June. And this green line is another piece of statistical analysis that shows, based on information since 1991, how does FedEx behave compared to its historical seasonality. And we can see that historically FedEx is making kind of trades in a sideways range, right? Going into June, July, and August, it's going to trade in a channel, and then it's going to probably make a new higher highs and higher lows going into November and December, kind of a typical stock market behavior. So by looking at this information, you can see where FedEx is heading. Then the third step is, let's look at more granular level predictions. So we can actually go in, click on My Tools, and Stock Forecast Toolbox. This is the third tool that we're using. First step is, see what stocks to trade. That's this screen. Second step, see what the key support and resistance are for the next 50 days. You can see our prediction, 30-day, 40-day, and 50-day prediction. FedEx is making new higher highs. And the final step is, if we go to My Tools Stock Forecast tool and type in ticker FDX, click on Go, and click on Short-Term Prediction, it will actually show me what our predictions look like, again, going into the next 10 days, whether it's 10 days or 6 months, but 10 days. This model basically shows you day by day with high certainty, if there's no binary event, where the FedEx will be between the low of the day and the high of the day. So this April 29 number we calculated yesterday on April 28, and today you can see with high certainty that FedEx is trading between 168 and 171. And currently FedEx is 169. Once you have this information, especially as you're going into April 30th, May 1st, May 4th, May 12th, if you trade weekly options or you trade stocks, these are the most important information that you can get out of this, is what are the key support and resistance levels are for the next 10 business days or for the next 50-day business. And these two models, this model, they work completely independently. They've been designed by different teams. The idea is that one model works better and makes better prediction the longer the time horizon is, right? Kind of following option expiration cycle. It has a much higher predictability for 50-day horizon. And the shorter the time period, much harder it is to predict the price action. This model, Stock Forecast tool, is a different model, is geared toward more of a short-term trading to see what are the key support and resistance on daily basis. And we kind of, again, projecting what the price of FedEx is going to be going into the May. So once you have that, and I do encourage you to, I know we have a lot of questions, so this is great. I encourage you to type all your questions. I'll make sure that towards the end of the presentation, I will answer all of the questions that you have, but I do want to go over, the key concept of, selling to a strength and making sure that, I cover the all of the topics that I want to present. So, okay, so this is a price forecast, right? The first step, what stocks to trade. Second step is, okay, what are the key support and resistance are for short-term and mid-term range? And then the final step is you got to pick the right strategy, right? We talked about short-term volatility. You can be correct that FedEx is going up in the next 50 days, but, we had a pullback today, and if you had your stop order, you got stopped out, and then only to find out that in 4 days it's actually making going further and making new higher highs. So how can you design a strategy? So we're going to talk about two concepts. One is the selling to a strength. This is kind of a topic today. a proactive trading strategy carried out by selling out of a long position, right? Once you see that there is an overhead resistance, like you see on current market, if you look at SPX, you see that we have an overhead resistance, and doesn't seem like there is a short-term impetus to break this overhead resistance. So then if you're in that campaign, you are selling to a strength. And that's the topic for today. But in reverse, kind of going back from both scenarios, how can you do buying into the weakness? If S&P is in the midst of a pullback from multi-year high like it is now, there are two camps forming. One side believes that this is the beginning of the end of the current bull market. The other argument is that the current pullback of around 4% is merely a normal and healthy sell-off, whether it's 4% or 8%. But a lot of people are in campaign that we're not going to have more than 4 to 8% sell-off because interest rates are still low, and we're kind of at this final stage of a bull market that might have another, a year. So Tradespoon, we personally fall into the latter camp, and we believe that we should have anywhere from 4 to 8% pullback. It's a healthy pullback, but then long term we're still into in the bullish market. So approach is many traders will wait for confirmation of a change in the price movement before reacting. However, by the time a reversal is confirmed, it may be too late for the trader may end up losing. Those by trading against the prevailing trend in the anticipation that it will soon reverse, the trader allows himself or herself a greater margin of safety. So that means, if the market sold off today, how do you take do you wait for confirmation? Do you wait another 1 or 2% for sell-off, or do you actually start buying into the weakness? And that's where finding these support and resistance levels are extremely important. So we're personally looking for IV volatility increase. You want to look at the implied volatility of the options because it gives you information about fear in the market. And as the markets sell off, like we have today, implied volatility, the uncertainty in the market is elevated. That means that the premium, if you're an option trader, increases. And you can take advantage of options. If you're a stock trader or an option trader, you can take advantage of that increased implied volatility because you're basically getting more money for the options that you're trading. Because there's the higher uncertainty, the higher premium in the same option. You are looking for 3 to 5% movement in a short period of day. If in the next 5 days, we already had a market pullback for the past 3-4 days. If we have another 2 to 3 days of market sell-off, and we have anywhere from 3 to 5% sell-off, probably reaching the 2080 or 2090 level on S&P, this is a great time to kind of buy onto a weakness or sell into a strength. So if we go back to our charts and type in SPY, you can actually see that SPY is reaching all-time high here. And it did it in very short period of time. So now it's kind of an opportunity, especially a couple of days ago, that was an opportunity to sell into a strength because there is this overhead resistance that we saw on April 28th, April 29, right? We see this overhead resistance, and then going into the future, we think that we're going to pull back and have a short-term correction, right, and reach as low as 209. So if we sell off from 211 to 209, that's an opportunity to kind of buy into the weakness. And you gotta use, some kind of tools to identify key support resistance levels. I mean, you can use trade ideas. Trade ideas is really good about finding different setups, like when moving average or RSI make a certain move, or there is a Bollinger Band. You can set up trade idea software and says every time you reach a 2 standard deviation move on a Bollinger Band, go buy or go sell. Depends if you're in the lower band or upper band. But whether you use Tradespoon technology or trade ideas technology, you need to be comfortable with some kind of technical indicators that tell you what the key support resistance are and what are overhead, whether the stock is overbought or oversold. So basic price chart that we provided Tradespoon is a candlestick chart that we already seen here. This is just a quick overview. If you're not familiar with technical analysis, I assume since most of you are trade ideas community, you're very well versed in the technical analysis. So I'm not going to spend too much time on this idea that if you're a mid-term trader or long-term trader, you do want to look at the charts. When you see if we reach an overhead resistance, you want to make sure that your time horizon matches your time horizon matches your trading style. If you trade in, if you're holding your position for 20 days, 30 days, 40 days, then you want to look at daily chart and you want to look at the 30-day chart. If you're a day trader and more active trader and you hold your position for hours or maybe a couple of days, then you want to look at 5-day and 15-day charts. You want to start recognizing chart patterns such as resistance and overhead support. What is the price resistance? I'm not going to spend too much time, but if you're using Bollinger Band or you use Trade Idea software, it can actually tell you, hey, you reached an upper band of a Bollinger Band, that's an overhead resistance, or you reach a lower band of Bollinger Band, that's an overhead, that's an underlying support. Then what, selling to strengths, what trade do we trade? How do we construct that short position? So if to do that, at Tradespoon, we provide you, again, just like I talked about Tradespoon pools, you can also run Tradespoon pairs and actually see which stocks are we short. And you can, full disclosure, some of these positions we actually short. So let's go through a live example. I'm going to go through all open positions. And this is our Tradespoon service. Every day we provide you with a trade recommendation, whether it's long or short. It's kind of our trade idea of the day, similar to what trade ideas have for trade of the week. We have a trade of the day, and we tell you. So let's look at the short. Let's look at LVS. It's sold off. We made the recommendation on April 27, and it's sold off. So since it went in our direction today, let's look over through the example. But the idea is that we saw a chart. We see this overhead resistance at 32% retracement, and our scanner showed us that the 20-day forecast, 30-day, 40 days, and 50-day forecast is lower. Also, if you type in LVS in our prediction, we can actually see that there is currently we see that our prediction going to make that we're making new lower lows on LVS, and you see it's trading for $55. We're making lower highs and lower lows. Since this is our analysis, we are recommending a short, establishing a short position. And as I said before, to be a successful trader, you need to know what stocks to trade, whatever your scenario is. Second step, you got to find key support and resistance levels. Third step, you have to design a strategy. If you do only one of these three steps correctly, you most likely will lose money, right? You got to be correct on all three steps. So we help you with that by providing you with we're providing you with the trade recommendation, but also a video that explains you step by step how do we arrive to that decision, how do we trade. So if you're a stock trader, we recommend you selling short LVS stock at $55.25. If you're an option trader, we're telling you buy a 60 put, or if you're an option spread trader, we're telling you to sell a 55 call and buy 60 call, selling a credit call spread. So that's the step. You first want to look at the current price, you want to look at the implied volatility, you want to review any binary events, and you want to establish a bias based on either Tradespoon technology or your own bias short term where the stock is heading. Option spread is a preferred strategy for us because of the probability of success. Right? If you look at the option spread strategy, if you're not familiar with that, or if you're not familiar, it's actually would be a good question. How many of you are option traders? Can you tell me? Or how many of you never traded options? I want to make sure that, if you never traded options, maybe I can spend a little bit more time on explaining this. But if you are, proficient with options, maybe not. Oh, never traded options. I'm new to options. Yes, traded options. Okay, so we have a mixture. Some of you traded options, some of you did not trade options. But what options allows you to do, and if you never traded, you probably want to just consider it maybe as as a learning exercise. But what options allows you to do is basically follow a probability curve, right? If you trade in stock, in reality, at this price level, if stock trades, at $29 level, there's basically 50-50 chance that the stock is going to be high or low, right? It might go up or it might go down because the current stock price is, $29, let's call it. Well, what options allow you to do is basically say that if I'm selling out of the money options, I can reduce basically my cost basis. The number one reason to trade options is cost basis reduction. Instead of selling short, let's go through a specific example. Uh, let's do it here. Instead of selling short LVS at $55.25, right? That was the price at the time of the recommendation. I'm actually selling 55 call and I'm receiving $1.80 premium, right? I'm doing the spread. I sold 55 call, I bought 60 call. And you guys can review this, if you're new to option trading, it's obviously a lot to digest, but if you're at least traded options, you'll understand what I'm talking about. But what the options allow you to do is basically sell at this option for $1.80. That means that my break-even point is $56.80. And this is why options is actually gaining popularity, because what it basically allows you, instead of waiting for break-even point at $55.25, your break-even point is $56.80. And that is the power of options, if you construct the strategies correctly. So now let's look at the probability calculator. It is important to understand when you trade options is that looking at the probability, let me erase this so it's a little bit more clear. But looking at the options, right, our not volatility, but looking at the probability curve, the idea is that you want to structure your trade where you correct, and Dan talks about this a lot, that you're correct 68 to 70% of the time, right? Call it 80% of the time. And you can actually use the statistical software like Trade Ideas and run backtest to see it, or you can use this with options, because what it allows you to do is reduce this cost basis, right? If LVS is trading at $52, you can sell 60 call, and there's only 10% chance that LVS will break above $60. So that's the power of options, is that you're able to reduce the cost basis and structure your trade that you're 68 to 80% accurate. And trading with statistical probability is very important. Just like, when you go back to math class and you have two dices, right? You have two dices. And you roll two dices, that has 1 through 6. You roll them over and over again. You know that number 7 will come out most often, right? It has a lot more permutations to come out than, let's say 2 or 4. If you roll two dices, the next, in terms of probability of success, you have 6 and 8. So kind of intuitively, or back to your math class, that if you roll in dices, if you want 50% of the time to be accurate in terms of what will come out, that 7 will come out 18% of the time, right? 6 and 8 will come out maybe 14% of the time. So that means between these three numbers, 50% of the time, you'll have 6, 7, and 8. And if you want something, 70% accuracy, well, okay, then you add 4, not 4, but you add 5, 6, 7, and 8. And I don't like comparing trading to gambling, but, if you're familiar with scraps, then you know what I'm talking about. So you know that if you want 5, 6, 7, and 8, it's 70% of the time. You also know that 1 out of 4 times, number 7 will come out if you keep rolling these two dices over and over again. Trading options is the same way. You basically are able to trade options by using different strike prices, and what it will allow you to do is be 68 to 80% accurate. And if you're 68 to 80% accurate, and I know Dan reemphasizes this statistical analysis, and you trade small and you trade often, you kind of roll these two dices over and over again, then you can structure your trading that you are 68 to 80% accurate. And as long as your winners are equal, an amount of your winners is equal to the amount when the trade goes against you, you can steadily and slow grow your portfolio. And that's kind of what we teach at Tradespoon. So looking at the structure and the math of this, at this trade, this is your credit put spread, right? And the profit and loss looks like this. For the credit spread, you basically mitigating, you're limiting your upside, but you're also limiting downside. And option spread strategy, like what we showed here, what we showed for LVS, basically allows you to say, as long as LVS doesn't make rapid movements in the next 10 to 50 days, then you know that your maximum gain is here and your maximum loss is here. And if you do have a short-term volatility like we have now, well, you structured your trade, and big moves to the upside or downside, it doesn't stop you out from your position. When you trade spreads, you don't have to put a stop order. You basically are bound by expiration. So same analogy is for price support. How do you buy into the weakness? When you see once SPX actually corrects itself 2 to 3%, and let's say we reach support, how do you take advantage of that information? It's kind of a reverse. You establish a long position. We already went through how we come up with a long recommendation by looking at Tradespoon bulls, but let's look at the most recent pick. This is a trade recommendation we did on April 29th. Biotech has been under pressure, and our analysis showed that Amgen is actually our prediction that is going to be higher in the next 20, 30, 40, and 50 days. And there's a high predictability factor. Based on this information, and based on the fact that if you look at the chart that Amgen did sell off and reach this 50% retracement on the 60-day chart, we decided to go long. And we can actually look at the stock forecast tool. If you type in Amgen, you can actually see that our prediction for Amgen, and again, full disclosure, we are long this position, and we're in that position. Get the disclosure out of the way. You see that short term, we have a downward pressure, but then we are making new higher highs going into May 12th. And that's our prediction. Based on this prediction, we are establishing this trade. Again, how can you take advantage? You can either go along with a stock, or you can buy a call, 150 call, and have a break-even point at $164. Or again, you can sell a credit put spread. You can sell 160 put, and for $3.10, that means that my break-even point is at 160 minus 310. It's 150, roughly 150, right? 156.90. So instead of going long at 162, I'm going long at 156. Well, that's 6-point difference, right? $6 difference out of 162, that's roughly, what's 3%, right? 2 to 3%. If I can get 2 to 3% discount on the purchase of my stock, that means in terms of our probability chart, right? I'm going to be more at automatically 68 to 80% times correct. Just purely from statistical point of view. Because if I'm trading Amgen at 162, then it's a 50-50 chance that the stock will be higher or lower tomorrow, day after tomorrow. Can't really predict that. I mean, you can predict it by looking at different softwares, but the point is that statistically speaking, it's a binary. You flip a coin, it's either going to be heads or tails. But if I'm able to, when the Amgen is trading at 162, I can actually buy it at 156, then automatically I know that 68, statistically speaking, 68 to 80%, I will be accurate in this trade. And again, if you look at the profit and loss chart, the limitation of option spread trading is that you are limited on your gain, right? This is a profit loss chart. If Amgen goes this way, right, I'm capping my profit at the, what was it? I'm capping my profit at $3.10, which is not bad. It's 2% gain, right? In a short period of time, if I can make 2% every 20 days or 30 days, this is a great return. But, if Amgen does this, I will not benefit from any more upside movement beyond 160 put. If Amgen ends up at 162 or 170, I'm not going to benefit from this trade. But I'm trading options and I'm leveraging options allow you to leverage your capital. So if I can make 20 to 30% in 30 days trading options, that's great, right? It gives you a lot more leverage than trading stocks. It's very hard to trade, stocks that don't move only 2 to 3% and make 20% in 30 days. It's impossible unless you trade penny stocks or some high beta stocks. But with options, it's kind of an average. You can make 20 to 30% every 30 days as long as you structure your trading correctly. So position maintenance is very important. You want to close your position prior to, before option expires in the past 15 days prior to expiration. At Tradespoon, we actually send you an email and tell you at what point to close your position and when. And the way we do this, if you notice, for every trade recommendation that we do, and especially if you want to learn options, this is a great kind of a mentoring program. You type in your password, you go into a video, and you can actually see a 20 to 50-minute video where we are actually not only tell you step by step how to trade, but we open up an account at Trading Block, and we are actually every Tradespoon recommendation we make, we trade it in a real account. We trade it in a real account, and we show you the video how the balances change, which orders gets executed, at what point do we enter position, and at what point do you exit position. So if you're new to options trading, or if you want to kind of learn how to use Tradespoon technology and do real-time trading in real account, this is a great kind of a system that shows you step-by-step process how we are managing our own portfolio using Tradespoon technology. And for every trade recommendation, every day, we're providing you with this video. So again, we started with the trading plan. We want to end up with trading plan. I think, in my opinion, and I think you'll share my opinion, if you traded long enough, to be a successful trader, you need to know what stock or underlying assets to trade, futures, indexes, whatever you trade, you need to learn them, and you need to be comfortable with them. Whether you always trade Apple, or you always trade Netflix, or you always trade S&P Mini, you have to get used to them. You have to learn how they behave, or you have to use some kind of a software package that tell you what are the best stocks to trade based on predictability factor. The second step, you need to know what our key support and resistance levels are using technology like Trade Ideas or Tradespoon. The third step, you have to construct a strategy. You have to construct a strategy, whether it's a stock trading or option trading, that can benefit from the statistical analysis and put the odds in your favor. Or it's not a 50-50 kind of a flip of a coin. You have 60, 70, 80% odds of being successful. Then your trading plan becomes the 50% of the other success, right? The first step, you need to know what to trade, when to trade it, what are the key support resistance level, what is the strategy. The second 50% is you got to have a trading plan. You have to know when to get into position and when to get out of position. So this is why at Tradespoon, this is what we do. We build a mentoring program where you can watch our videos and how we trade our trades on daily basis, and you can learn how we trade and what our trading plan. Granted, everybody is different, and you should consult your financial advisor before making any trading decision. We're all different. We all have different background and different capital that we are managing, but it's a plan, and you can adjust that plan to suit your own financial goals. So our plan is allocated 5% per trade. Average holding time that we have is 30 days. We trade in stocks and options, and our average return has been under 20%. So if this is your trading plan, or this is kind of a Tradespoon, if you trade even once a week, which is 50 trades, and you're making $100 per trade, that's 20% of $500, you can make $5,000. So that means you can have anywhere from 3 to 5% return a month. And the way we are showing that, you can actually watch our videos on a daily basis, but you can also see our performance. Every time we make a trade and we tell you about it, we record it. And we've done this since the inception, since 2012. We show you every single trade we've made, what happened to that trade, not only so you get comfortable with our system and how to trade, but also you can get comfortable with this trading psychology and trading plan to show you how important it is to see that if you trade stocks, we've been averaging 10% return per trade off of limit price. If we trade options, we're averaging 11% return. If we trade in stocks, option spreads, it's 16%. So statistically speaking, if you do this over and over, if you trade small and you trade often, statistically speaking, because you are reducing your cost basis, option trading is more successful than trading stocks if you do it correctly. But statistically speaking, because you're able to reduce your cost basis, right? Instead of buying uh, Apple at 134, if you can buy Apple all the time with 2 to 3% discount, you know that you statistically you'll be more accurate and more correctly if you just buy in straight stock. It's intuitively it makes sense, but unless you understand nuances of the options, that's kind of the advantage of options. And we're showing you that we've made over 600 trades, 392 were winners, 217 losers. What does that mean? That means roughly 68% of the time we are accurate. So if we are accurate 68% of the time and our winners equals to our losers, the amounts, and you can see all of our winners and you can see all of our losers, that means slowly over that period of time, if you trade small and every time you can make 30% return, 10% return in a short period of time from March 19 to April 6, then you can see how your portfolio can grow from months to over months. And we actually did this with backtest. We went and backtested all of our trade recommendations since 2012. And assuming 10,000 portfolio was $500 trade, you can actually see how our portfolio has grown. So I know you guys have a lot of questions. I'm going to get to them shortly, but I do want to go over the offer that we have. So if you go to tradespoon.com, I'm going to type this in Trade Ideas TI and type in TI. Our regular price is $97 a month, and you get access to our daily trade recommendation, to our overnight videos that mentoring you how to trade stocks and options. But also all of our technology that I've showed you in terms of picking the right stocks that have high predictability and finding the key support and resistance levels are. So if you go to Tradespoon TI and click on Enroll Now, you get in 30% discount. If you get trading, if you don't want a long-term contract, just want to try us out, see if you want to learn options, or if you already trade options and stock, you want to kind of learn more about our program, it's $67 a month, it's 30% discount. If you do a year trade, if you want to sign up for a year, it's 40% discount. And we will, if you decide in 4 months or in a couple of weeks, hey, this is not for me, or I went on vacation during summer, I don't want to trade, we'll prorate it. But you can get up to 40% discount on this annual membership. So I'm going to type in this in the chat box to make sure you guys have this. And I strongly encourage you to look at our performance, to look at our backtest, but also look at our trades and watch our videos. I think if you want to learn how to trade stock and options, and if you want to follow someone who has, team of portfolio managers who've been building this technology, who actually traded with real money, this is a great way to learn how to trade stocks and options, have a concrete trading plan, but also, if you're a more experienced trader, have access to tools where you can type in basically, any ticker symbol. You can, let's say you try trading NDX and you're a futures trader and you want to see what is the short-term prediction, you will actually be pleasantly surprised how accurately this software predicts stock movement for the next day, 2-3 days. If there's no binary event, if there's a geopolitical event tomorrow and the market sells off 3 to 4%, the software will not predict that. But if tomorrow there is no geopolitical events, there is no binary events, it will accurately predict at least the support and resistance levels are, which is very important part of the trading. Okay, so now that we are 45 minutes into our discussion, let me go over. This is a perfect time for you guys to type in your questions, and I'll try to make sure that I answer most of your questions. Does your software cover FTSE and European stocks, Ross? Yes, it does. Do you have a stock in mind? You want to look? I don't trade European stocks, so I'm not sure. FTSE index, yeah. So FTSE 100, click on Go. short term, you're based in UK. So at least FTSE, the indexes and any stocks you want to trade, you can type it in, and it will give you prediction where we think the FTSE is going to be in the next 10 days. Why not trade weeklies with short-term prediction? I personally trade weeklies in short-term prediction. Weeklies, in my mind, are geared for somebody who's more active trader and who has a lot more experience. So if you watch our videos, we do sometimes use weekly options to hedge our position. So if we're long Amgen, and let's say we run our prediction for Amgen, and we see that there is an overhead resistance, and Amgen is not making new higher highs, we might consider selling, 170 call, right? 170, 175 call to reduce our cost basis, legging into a counter. But we are constantly using either weekly options or monthly options to reduce our cost basis. So even though we don't provide trade recommendation on weekly basis, because ultimately we believe that longer term trading has high predictability. Short term, it's harder to predict with high certainty where Amgen or FedEx will be tomorrow and the day after tomorrow. If you're a more active trader or you're a day trader, you can. But most of our community, they have full-time jobs or they're kind of new. They don't want to trade on daily basis. So if if you have a full-time job or you kind of want to do like one or couple trades a week, you don't want to trade weeklies. It's just too active trader. If you are more active in trading, then yes, definitely weekly is a great tool to use, and the stock forecasting tool is perfect for weekly option traders. WEIR, WEIR. So let's try European stocks. WEIR. The Weir Group.L. All right, so we have it. What's our prediction? I haven't tried European stocks and I don't trade it, but we do have predictions. And this is a perfect example. Right now it's at 160. We think in the next 10 days it will make higher highs and higher lows. So if you're an option trader, potentially consider that 160 is for the next 10 days. We're not going to breach, this 157.5 level, right? We see these sell-offs at 157.5, but 155 is a long-term support. So, or am I not on Amgen? Sorry. So long-term support is in 1700. Okay, so 1700, you might want to consider selling 1700 put if the puts are allowed. If there's no option activity for this European stock, then consider going long anytime you approach in the 1722 or 1739 level. I think would be a great opportunity to go long on that stock, but it's obviously a volatile stock. How about Twitter? Looks to buy calls. Twitter prediction, obviously after their earnings it sold off. Is there long-term support? We think at, 42? We think it's not going to breach the $40 level. Long-term prediction. I would sell in the 40, sell in the 40 spread might make sense, right? 40 put, because we don't think we're going to breach, but loss for the main is $36.90. So it's kind of our prediction for Twitter. What is the shaded area behind the candle? Shaded area means predicted versus, this is what actually happened. This is what the predicted price is. See predicted price for previous days. Let's see, Vlad, can I see spiders on seasonal chart? Yes, spiders. So if you look at the spiders for the seasonal chart, you can actually see that our support is at 205. Overhead resistance is 210. We don't think, what did the spiders close today? Spiders. 210.57. Yeah, we think you want to go short on SPY. That's the bearish signal, because we think that this is an overhead resistance, and at least there's in the next 20 to 30 days, there's no impetus to break the overhead resistance. Do you use minimal IV rank to filter out option spread trades? Yes, Joel. We do use implied volatility. So here we call it volatility change. So we are looking at the implied volatility for the past 52 weeks versus currently to filter out trade recommendation and making sure that we are trading the most optimal strategy based on implied volatility. So Joel, thank you for the question. Let's see. Is there a manual intelligence or trades generated by system? There is a, yes. So the recommendation, this is, the Tradespoon Bulls list is automatically generated by system. So every day you can come in and basically run your scanners. Let's say you're bullish and we want to buy into the weakness. Every day you come in, you run 9 to 10. This list of 18 stocks, well, let's do 10-10, like best of breed kind of stocks. This list, these three symbols, is generated by computer. There is no manual intervention. But for our most recent picks, right, for our picks that we actually trade in our real account, this is, we have a team of portfolio managers that basically decide out of the symbols that we have on our list, which symbols to execute and trade. So picking which stock to trade out of 5 or 6, that's done by humans. But providing you a list of 5, 6, 8 stocks that have the highest predictability, that is done by the computers. Whereas I don't see gain of that. There is a drawdown of Mark. Show me the stock that's split for 50 days. What is this? Can you show picks of past 5 days? So okay, yeah. Here's positions. Here's our picks for the past 5 days. We are trading June expiration, so we're waiting for June. Some stocks went, in our favor. Some stocks, went against us. Market is volatile, but the idea is that because we are structuring our trade using option trades, again, we are, as long as Amgen is below $157, not below $157, we're making money, and we are waiting for June 19 expiration. So thank you for that question, Mark. There are some drawdowns on some of the trades. Some of the trades, yes, there is even though we try to avoid that, some of the trades, let's see, when was the last time? 100%. Yeah, so back in January 8th, we did have a 100% loser. That means, if we did a debit spread for $3.30, we lost 100%. It happens. We try to avoid it. That's why we try to avoid binary events like earnings. We trade in between earnings, but ultimately, it's we're all humans. We make sometimes mistake, and sometimes we do have a 100% loss. But that's talking about option trading. This is, I put a debit spread for $3, I lost the entire $3. I waited till expiration. Most of the time, we don't wait till expiration, and we close our trades for less than 100% loss. So thank you, Mark, for that recommendation, for that question. Let's see. Okay, let's see. Is there a market to read message? Not sure what a market read message from your experts. Daily market messages. Yeah, we do send daily emails where we tell you which stocks to trade and any adjustments to our position. We don't have a comment. We do have a live broadcast, so you can actually, you can look at our live broadcast where we have guest speakers and we talk about market conditions. We talk about Wall Street week ahead. We talk about mechanics of the pick, and we talk about live education. But that's what we do. Do you make an adjustment on losing trade or just close? We do make adjustment to losing trades. If you watch our videos, we are basically every day we run our software, and just like Home Depot is one example where we're long and the trade went against us. So we're constantly monitoring our portfolio, and if we see that there is no chance that Home Depot is going to break above 115. We sell 115 call. So we are adjusting our position and we are mitigating, we are reducing your cost basis. Let's see, TI. Okay. What was the scanner shows top 80? Steven, it's under my tools. If you go to Tradespoon Bulls, this is your top 18. Top 18 that will outperform the market and outperform the peers in its group. Bears is the other way. The stocks that will underperform its peers and will underperform the market. This promotional offer is open for 24 hours. So we're going to send, we have a recording, we'll send email to everybody, and we'll have that TI offer for 24 hours. TI, Tradespoon, TI, I don't know why I can't. TI. All right. Let's see. Did you make adjustment daily? You don't try to roll out losers for more time to get or even get profitable. Joel, sometimes we do. I mean, even if a trade goes against it, let's say a May expiration, and we're losing the trade, right? But our prediction still shows that going into June, there is a high likelihood that the stock will rebound. We will close our May position, we will record as a losing trade, and then we'll reinitiate a new position that will expire in June. All right, it's 4:26, maybe another couple questions. Lena, how do you use stops for your open positions? How many open positions do you manage at once? Good question. We use in option spreads. Usually we have anywhere from 12 to, I would say, 14 positions at any given time. Do you use stop orders? For option spread orders, we don't use stop orders because option spread, the way they are designed, you are limited to the difference between the strike prices as the most you can lose, right? For debit spread, it's just premium that you paid. You can never lose more than premium that you paid for option trading. If it's a credit strategy, then it's a difference in strike prices minus the premium. So for that reason, we don't use stop orders on option spread trades. If you're a stock trader, especially if you just start trading or trading for a couple of years, you absolutely have to use stop orders. And we do provide you with the stop orders recommendation for our trades. Calendar spreads or iron calendar? Yes, we do calendar spreads and we do iron calendars. Thank you, Pete, for that question. Can take yearly promotion after the trial period? No. The promotion is only available for, we partner with Trade Ideas. We absolutely appreciate the time that Brad and Marisa dedicated to this webinar, to Dan, and we know that you're on this webinar because you want to become, you want to learn more about trading, you want to learn more about option trading, you want to become more successful trader, and you spend an hour on this presentation. So we want to give you an opportunity to become part of Tradespoon community, but this offer is only going to be available for the next 24 hours. So I think at this time, I want to say thank you to Brad and Marisa and Dan for having me and giving me opportunity to present to Trade Ideas. If I missed your question, go under my tools, enter technical support. Any questions you guys might have, I'll be sure to answer them promptly. I encourage you to take advantage of this offer. I think for $67 a month, it's not only a great technology that gives you prediction, kind of forward-looking prediction where the stock is heading, or option or an index heading, but it also gives you kind of a mentoring program and a trading plan that can help you grow your portfolio kind of months over months. And follow us on Twitter and Facebook. If you want to kind of stay in tune, we have a handle on Facebook and Twitter. Just go Facebook/Tradespoon or Twitter/Tradespoon and follow us on Twitter and Facebook. Michael, thank you. Pete, thank you. I appreciate your feedback. We spent a lot of time, Brad and Marissa already spent probably 3 hours today listening to me. So that's great. We spent a lot of time and energy building these webinars. So your feedback is extremely important to us. Any ideas how to make this better, or if there's a constructive feedback, send your questions to technical support, and check out our upcoming webinars also, where we do these webinars on almost daily basis. Ross learned a lot today. Perfect. Thank you for kind feedback. It means a lot to me. Brad, Marissa, thank you very much for having me.
You're welcome.
It's been an hour, and I think at this point, I think I covered most of the information.
You did. You covered a lot. Thank you. And thank you for everyone else who attended today as well. Very cool stuff, Vlad. I'm sure everyone here really appreciates you spending that time on clarifying what it is that Tradespoon can do for options traders. So thanks again. I
Thank you.
guess we're just going to go ahead and wrap it up for today. Again, if you guys have any questions, you can contact Tradespoon's technical support, or you can always email us too at info@trade-ideas.com, and we can always forward it over to Vlad. All right, well, I guess that wraps up the webinar for today. Thank you so much, everyone, and have a great day. Bye-bye.
Take care. Bye-bye.